Hello, dear YouTube viewers. This is Atilla Yeşilada broadcasting for Real Turkey channel. Real news about Turkey, economy and politics mainly, not everything. Today we're going to talk about Turkey's chronic double-digit inflation problem. It is really unique. There are very few countries in the world that constantly record double-digit inflation. In June, Turkey's CPI inflation rose to 17.5% year on year. That puts Turkey among the top 10 high inflation countries. If you live in a Western country, in Europe, in the United States, Australia, Japan, inflation is something you probably haven't experienced in your life. It's not a major concern for you. I mean, the price of one good or other that you regularly purchase may suddenly increase because of, input cost increases or, bad crops. But overall, you are living with either disinflation or zero inflation. It is important to understand why double digit inflation is so costly to the society in many respects. We have a 5% inflation target, which I think we have met only once over the last 10 years. The main reason Turkish inflation is so high is President Erdogan has very strange views on how monetary policy works and the capital investment, what stimulates capital investment. Looking forward, inflation is likely to rise further throughout the year and condemn Turkey to stagflation as long as Erdogan stays in power. Can Turkey cure inflation? Actually, it's simple but very costly. So, this is the introduction. Let's first look at Turkey's inflation chart. The red line is CPI. As you see, it is bordering on 20%. And the blue line is PPI. That's wholesale price index in old terms. And it's shooting up to 45%. It's not always 100% certain that wholesale prices will eventually be reflected into CPI. But if an economy is growing at a fast pace, that happens to be the case. So, Turkish economy is currently very slow, almost no growth in the second quarter. But if Mr. Erdogan gets his wish and Turkish growth accelerates, I assure you that red line is going to approach the blue line. So we're going to have like 35% inflation, which is unimaginable for any member of our audience who lives in the Western countries. Now, for those of you who have a background in economics would say, well, headline inflation doesn't really matter much. This year we have a commodity rally, oil prices rallied, so perhaps this is temporary. Okay? This is why we look at core inflation, and this is Turkey's core inflation indicators. To recall, the American Central Bank, Fed, usually determines monetary policy according to one measure of core inflation, that's core consumer expenditures price index. So it's not only the headline, but also the core that's rapidly rising in Turkey. It's up to 18%, I believe. Let's put Turkey in the perspective of the world. Where do we stand? Which are the other countries that have a high inflation experience? Here is a map, a heat map of inflation, so to say. So as you see, Europe and the United States report very low inflation. Blue is the highest, And, as the shades of blue get lighter, inflation is still high, but not extremely high. Turkey, as you see here, is one of the highest inflation countries. Let's put this map into a table and look at the world ranking of high inflation countries. Syria, Angola, Zambia, Ethiopia, South Sudan, Nigeria, Haiti, and then Turkey. Let's pose you a question. Why does Turkey stick out in this particular table? The answer is simple. Other countries such as Syria, Ethiopia, and South Sudan are embroiled in civil wars. I don't know what Zambia does, but the others are African or Caribbean countries which have very poor governance and really don't pursue the kind of fiscal and monetary policies that would be sufficient to suppress inflation. Among all these countries that are ahead of Turkey, Turkey is the most developed one. I think, yeah, I am fairly sure in terms of per capita real income, Turkey is far higher uh, than the other countries which have higher inflation. And Turkey, even though institutions have been weakened in recent years, still have a decent structural network. We have a good treasury, extremely competent people. Supposedly, the central bank is supposed to be independent so it can pursue the policies to reduce inflation. And, you know, many people claim that it is the food inflation or the oil price rises that stoke Turkish inflation, which is not true. India is exactly in the same situation as Turkey, so is Brazil, roughly same stage of development, but both have single digit inflation. And all of these three countries have a large food component in their consumption basket. So it's not true that food or imported oil drives our inflation. There are other reasons. Before I get to the reasons, let me show you another thing. There are widespread doubts that Turkey's statistics institution, Turkstat, reports inflation data correctly. In fact, I'm going to show you a poll by Metropole, which also publishes in English, and you can look it up at Twitter. In December, it has asked the participants what they think the true inflation rate is. This is in Turkish, I'm really sorry. 27% of the people think, I'm sorry, yeah, here, 27% of the people think, no, I'm sorry, 16.5% of the people think it is between 20 and 30%. 51% people think it's higher than 30%. Let me show you the official inflation. It is 17%, but half of the participants in Metropole survey think, nope, it's not 17 and a half, it's 30 or higher. That's a significant problem. I mean, you know, inflation is not what a statistics agency reports. Inflation is like beauty, it's in the eye of the beholder. If people think inflation is not 17.5% but 30% or higher, they will make their economic decisions according to what they perceive as their own inflation, which is, they will demand at least 30% salary or wage hikes. If they are capable as a corporation or small business, they will raise their prices at least 30% or so. So this is really a significant problem. There is another, just a second, let me get here. I still have, oh, here we go. There are a group of academics, reliable people, I know some of them. They don't have a political bone to pick. They are not AKP dissidents or dissidents to AKP. They started calculating their own CPI using Turkstat's consumption basket, but collecting prices privately and more frequently. Here I show the monthly data. Trust me that this group called ENAG reports inflation at least twice as high as Turkstat. For instance, in June, monthly inflation was 3.85%. My God. Imagine, your salary only changes once a year and it's a fixed amount. And only in 1 month, its value erodes by roughly 4% because of inflation. This is a nightmare for Turkish people. Let me just briefly explain the costs of double-digit inflation to the society. First, of course, it makes financial savings unattractive. What retains value in a high inflation environment? Real estate, property, gold, foreign currencies. So instead of depositing their savings into the banking system or into the, capital markets, which would in turn become loans for projects and further capital investment, they keep it at home or they invest it into non-productive sources of wealth, such as a house. A house, of course, is very important for a family, but it doesn't add to Turkey's capacity to export or to grow faster. There are other problems. The higher the inflation, the less is the visibility about the future. That is, for companies which want to erect a new factory or start a new production line, uh, present a new service or product, uh, it is extremely deterrent simply because it will take at least 3 years between the planning and production stage, and you don't know what prices will be in 3 years. So it also thwarts growth. Okay, what are the causes of inflation? Well, as I've said, President Erdogan is the primary cause, simply because he thinks higher inflation, higher interest rates lead to higher inflation. And I believe he is the only person who thinks so. But hey, he is the king in Turkey. And the central bank or any other institution is not independent. Everybody is an employee of Erdogan in Turkey. So Erdogan always pressures the central bank to cut interest rates before inflation is under control. And as a result, inflation keeps soaring, and then you raise the interest rates again. It becomes a vicious cycle, a catch-up game, a cat and mouse game between inflation and interest rates. Secondly, he thinks if we lower the interest rates, or at least the real interest rate, to zero, businesses will start investing. That's building new factories, importing technology, retaining more people as employees. This is a part truth or a half truth. It is true that all things being equal, lower inflation will stimulate investment, but that's not the only condition. Business environment is important. Taxes are important. The perception of a company about market opportunities is important. And Mr. Erdogan has created a business environment, as I've said, through high inflation and other measures, where companies can't foresee 6 months ahead. So even if interest rates are zero, Turkish capital investment will not rise significantly. There is another problem, of course. If interest rates are zero, people are going to withdraw all their money from banks, so banks won't be able to issue the loans for businesses to enact these investments. Of course, I shouldn't only blame President Erdogan. There are other reasons as well. Import prices are increasing continuously, which by itself is not a problem. South Korea, Taiwan, and Japan are also oil and commodity importers, but they produce very little inflation. Why? Because they have high value added exports that compensate for the cost of imports. We don't. In other words, terms of trade are working against Turkey. We import expensive goods, and the price, the dollar or euro price of our exports don't go up. So we suffer inflation. Another problem is credibility. Monetary institutions, like Fed, ECB, Bank of Japan, People's Bank of China, actually make monetary policy by credibility. Credibility is if I say something, people believe it's true and act accordingly. So I don't actually have to do that thing. Let's give an example from Fed. Fed says, I'm not going to raise interest rates until 2023. And Fed has credibility because in the past, it has delivered on its promises. As a result, even though American inflation yesterday exceeded 5%, American 10-year bond yield remained around 1.4%. So the bond yields are highly negative. Why would anybody buy a 10-year bond if he or she thinks it's going to lose money or its value is going to deteriorate in terms of purchasing power? Simple. Because Fed told them inflation is transitory. It's not permanent, it's temporary. So people shrug off 5% inflation, believing in Fed's inflation targets. This is not the case in Turkey. It's exactly the opposite. People know whatever the central bank governor says has no standing in reality. It's Mr. Erdogan who decides things. In any case, I think he fired four central bank governors over the last 2 years, so the credibility is completely missing. One way to show that there is no credibility is right here. Okay, here. If central bank had credibility, inflation expectations would be falling when the central bank says, I'm going to pursue tight monetary policy until I bring down inflation to 5%. This graphic is also in Turkish, but look, even though the current central bank governor, Professor Shahap Kavcıoğlu, says, don't worry, I'm going to bring inflation down, inflation expectations for 12 and 24 months are constantly rising. People simply don't believe the central bank is capable of fighting inflation. There is another problem that's caused by that. This chart, the red one, is the quantity of dollars Turks hold as deposits in banks. Currently, more than 50% of bank deposits are in dollars or euros. Clearly, they don't believe inflation is going to come down. And of course, since Turks earn their income in Turkish lira, if they want to make dollar deposits, they have to buy it in the spot market, which drives the currency down. The blue line is the dollar TL exchange rate. And as you see, as people accumulate more dollars, the Turkish lira depreciates constantly. And of course, this is another catch-22 situation because there is something called pass-through. That is, if a currency depreciates, it makes imports more expensive in local currency and eventually leads to inflation. In Turkey, the coefficient for pass-through is at least zero point 0.2, which means if the lira depreciates against dollar by 10%, within the next year, inflation will rise an additional 2 points. And since the beginning of the year, Turkish lira depreciated against the dollar something like by 12%. I don't know because exchange rate changes so quickly. This is a nightmare for Turkish citizens. I mean, they have to constantly exchange their earnings into hard currencies, deposit them into banks. When they do so, the value of the currency depreciates and the value of their disposable incomes goes down. This is why a lot of Turks are miserable and Mr. Erdogan's popularity ratings are going down. Is there any way to deal with this problem? Yes, but it's going to cost so much more. If your inflation target is 5% and actual inflation is 8%, it's easy to deal with it by slightly tightening monetary policy or, by cutting fiscal expenditures. Once inflation goes up to double digits and becomes sticky, that is, not only current inflation, but expectations of future inflation are also rising, then you have to cut an arm. That is, you have to pursue a very tight monetary policy. To give an example, if inflation is 17%, the central bank has, for instance, raised its policy rate to 25% to make people believe that it is earnest about fighting inflation. But of course, that leads such high real rates lead to recession. Or you can impose a lower real interest rate, but start producing savings on the budget. That is, the budget doesn't have a deficit but will produce surpluses, and that will reduce domestic demand and help cut inflation. But in any way, both methods would lead to a prolonged recession. And, Erdogan government can't really dare to produce such a recession because we may have elections next year. More than that, people don't like that. They would rather have higher inflation than recession. So Turkey is stuck. Turkey is condemned to, long-term stagflation, which is very low growth and very high inflation. At least as long as Mr. Erdogan is in power, or he doesn't change his opinion about the relationship between inflation and interest rates. I would personally think that, again, I really don't make any predictions about the next elections. Erdogan may win again. But as long as he and his philosophy is in power, Turkish inflation will continue to escalate. First to 20%, that will become the new floor, and then within a few years to 30%. This is a miserable situation. I want to thank you for watching our broadcasts, and your comments always entertain and humor me, and I benefit a lot from them. I had a few slight health problems which kept me away from these broadcasts, but from now on, God permitting, powers permitting, I shall be putting up videos more regularly. Thanks again and goodbye from Istanbul. This was Atilla Yeşilada presenting for Real Turkey channel.